Hey traders, Nick Shane here looking at the price action from the S&P on Friday the 5th, July. This is more of a lesson as to how to ignore the noise of CNBC and other experts. Just try to educate myself on how the prices move and the levels that really matter. So early this morning, the markets opened lower on a hotter than expected jobs report. First of all, we knew not to chase the spike because good news is bad news in this case, short term, headline wise, because the fear is that, oh my gosh, they're not going to cut rates. First of all, we don't need a rate cut. We just don't want them to raise them. And regardless of what happens is, do I close out of my longs? So I did have longs, and I said I'm not closing my longs because I know the price levels I need to watch before I panic out. So I shared this. We had already dropped like 1%. Shortly after the open, the markets were all red, either 1% or minus 0.7, 0.8%, depends on what you're looking at. So it was red. But I knew that we had three levels to look for, and I represented them, and we had hit one level, and I said, okay, one level met, maybe we'll hit to the second level and see what happens there. So sure enough, I think the worst of the day was, we'll get to it, but knowing these levels makes me not panic here. So if I had longs and they were green, I didn't bail out of them right away because that's part of normal price action. If I woke up this morning and I saw red, I wouldn't rush to the news to see what happened. I'd say, okay, yeah, we broke out of this neck a few days before or the day before, within the last couple of days. It's only natural to come back and revisit it for footing. You can't break out and just jump and continue on higher. You could, but it's not natural. The natural thing to do is to break out, come back and revisit and continue, like here. You break out, you break out, and then you try to revisit, and then solid footing. Then they break out again, and they come back and revisit the footing twice in this case, and then they make the bigger move, broke out of here. So you see, it's normal price action. So what happened? This is what happened. We hit the first level, we hit the second level almost, and bounced right off. So I don't like to see this strong V bounces, but it's normal price action. I'd like to see it unfold over a slightly longer period of time so it looks normal. But when it does this, people get confused. Oh my gosh, you were falling, now we're rallying. That's because you're chasing the headline. I'd rather not chase the headline. So what about now? Well, now we have erased this candle completely and we're back to the ledge. So if I'm starting longs here, I'm probably chasing. I'm staying long. I'm not saying bail out of my longs, but natural stopping zone is here. We're headed into resistance. But if we break through it, we're going to rally to new highs again. These are all-time highs, so nothing to be scared about. So the point of this, I don't chase the headline on what happened. Sorry about that. Someone just called me. Okay, so knowing the levels, I'm sorry, but I lost my train of thought. But the point is, I don't chase because I know the levels. I don't chase down. I don't chase up. So here, I don't start chasing, but I do note that if they're above 2997, it's good news. A new high will just bring in the extension of this rally that's ongoing here. Ignore the noise of CNBC and the like. Really, it's just bad to hear it. I do listen to it, but I have my own levels. I listen to it to critique it, to laugh a little bit. Sometimes they give me some news. I get some ideas here and there from the ticker they just mentioned, not as trading ideas, just tickers to look at. So I do my homework in order to react or not react on the levels. Now, if we had lost this third level down here, I would have said we could have retested the next level lower. But it doesn't change my overall thesis. These are headlines. I don't move on them. All right, Nick signing out.